Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update, taking a look at the markets. As a reminder from last week, we had that perfect zigzag pattern to the downside where we had the impulse move down, a perfect 50% correction, and then the equally perfect 100% extension, just dead on Elliott wave correction pattern being the zigzag pattern rules. So we touched that 100% extension. We've moved back. We said that we could continue down to the next extension level, or we could back up from here, but either way, we would have to go back and retest the previous Fibonacci level, which we have done in the market. So now we'll just see where things go from this point. It's going to be quite interesting to see what happens. We could be forming a bit of a triangle here at some point. It's way too early to call that, but that wouldn't be surprising because consolidation once a zigzag target is hit is not unusual. So perhaps we churn in this area for a while. We are moving into the seasonally strong time of the year where the market tends to, I shouldn't say strong, but seasonally bullish time of the year where the market tends to trend to the upside. Again, we still have the corrective patterns labeled in the Elliott wave with the larger patterns, but we'll have to see if we continue to churn in this area or if we move back to the upside with the seasonal trends. We do have our midterm elections are on Tuesday. A lot of people have voted early, and the fact that we may go sideways moving into the results of the elections would not be surprising. A lot of people think that if there's a party change in the House that that could be a negative for the markets, but actually the markets historically don't mind it when our Congress is split. We'll just have to see what the results are. Now, if the entire Congress goes Democrat, then that could be a negative because then there's the threat of all of the tax cuts, etc., the economic stimulus, not monetary stimulus, the economic stimulus that the Trump administration has done could be unwound. And I think the market would not take that too well. But I think the market would react surprisingly well if we do get, even if the Congress turns out to be split. Looking at the SPY to bring volume into the mix, we still have good volume on a daily basis here, getting a little bit more towards the average, but still in the above average category. And without the zigzag pattern here, we can draw a little bit better look at the potential triangle pattern here and the opportunity to churn a little bit sideways. Now, again, that's premature. We may not fill in any of this. We may just move up or down from here, but just the opportunity is there, and I think it's going to be fascinating to see which way we go. Looking at the VIX and bringing the Elliott wave on, we talked about the fact that if we do move higher, that would not be good for those that are long only the market. We are in the neighborhood of getting very close to the top of this wave one, and remember, if we violate that, as we did with the market, then the Elliott wave 5 pattern to the upside would then be negated, and we could settle back down volatility wise, which would coincide with what we were talking about as far as this sideways churn and forming a potential triangle. But at this point, we're still in the wave 4 retracement with a potential higher move up. Now, again, with the election results, anything is liable to happen. Difficult time right now with the results of the election coming up to try to make a call one way or the other on which way things may go. I did want to show you, we talked about this last week, TBT, with the consolidating triangle that we had right in the Elliott wave pattern to the upside. There's our triangle, and we turn the Elliott wave on, and we have the upward wave 5 target. And I mentioned to you that even though we were in a wave 5 to the upside, when you have a triangle, you have to respect the triangle rules, that it could break either way, and trying to choose a direction sometimes can get you in trouble, even if it's an overall larger Elliott wave pattern to the upside. In this case, it's worked exactly as the Elliott wave forecast. But I still think that it's prudent with a triangle to respect the fact that we could break either direction. What's interesting is when you look at the rules for a triangle, if you remember that we have the mouth of the triangle here, and that's the price range that you look at for how far the breakout will be. So if we look at 38 and 41, that's 3 points. We take 80% of that. That's what a target is on a breakout. 80% of the price range in the mouth of this triangle as far as the upside move. So that'd be roughly just a little over 2.5 points, right? Somewhere in that area. 0.8 times 3 would be 2.4. And if we take a look at where the wave 5 forecast is, the midpoint of the triangle is 40. So you just go roughly 2.5 points from there, and that puts us almost right into the Elliott wave 5 extension target. So those two kind of coincide with each other. In other words, the movement out of the triangle to hit the breakout amount on the consolidating triangle rules, the corrective triangle rules, almost is it going to be the exact same price as what we have listed here in the wave 5. Now, another thing that I wanted to talk about was the fact that when we have a breakout, it's important that we have 2 consecutive days. You've heard me say that numerous times. One day does not a breakout make. You have to have the second day, the confirmation day or follow-through day. Now, we had the breakout that occurred right here, and that was on the 31st of October, so on Halloween. We broke out, but we did not get confirmation on the second day. We actually closed just a bit lower. And then on Friday, we had the big move to the upside on the jobs report. We had a really good, very strong jobs report in the U.S. Also showed that wages were going up, and that, in my opinion, is why we had this big move to the upside in interest rates, because wage pressures are inflationary. And I think that could be why we had the big move higher. But that's just the breakout in my view, because we did not have a follow-through to the breakout that occurred on the 31st. So the big breakout is here. Will interest rates move to the upside again on Monday? If so, then we have the confirmed breakout. But you know, you can laugh and say, well, yeah, you confirmed breakout, you're already at your target. Of course you have the confirmed breakout, but just following the rules, and that's how you become successful over long periods of time, is you're prudent at following the rules, and Elliott Wave will guide you to success if you have enough knowledge to understand the rules and then the discipline to follow them. You need to have both. MasterCard is still in the wave 4. It's showing a lot of strength in this market. It didn't correct nearly what the market did, and we could resume our upward move at any point in time here. So that case study is still in place for a potential upside move. And then a new one, surprisingly, last week we didn't have anything on my my bullish search that has the Elliott Wave indicators. Again, I use Integrated Investor to create a technical Elliott Wave bullish search on healthy stocks, so you get the best of both worlds. That's one of the things that I really like about this software, is the fact that you can program both technicals and fundamentals. It's not just a technical program. Last week we didn't have anything. This week we do. We have a new one that we want to keep an eye on, and it's actually, in a way, look at this pattern. With everything that's gone on in the market, it's been relatively unaffected by it. So it's in a very strong wave 3 to the upside. There's your wave 4 forecast if we pull back, but in the January area, and for those of you, again, that like the fundamental side of things, we're moving into what? Shopping season, right? Holiday season. So that could be a catalyst to drive the stock higher and reach its target. So that's a new case study for us to keep an eye on, and we'll be back to talk to you again next week and see how things play out. Hope you've had a wonderful week. Take care, everybody.